Mergers and acquisitions have been a major trend in the mining space in 2019. But what trends might investors be missing? We asked 5 experts to share their thoughts, and the answers we got might be surprising. Brent Cook of Exploration Insights is known for his stance that not enough major new deposits are being discovered, and he pointed to that as a trend that investors may be overlooking.
The overall trend is that we're not finding near enough new deposits to replace what we're producing. That's sort of like, and that's a big long-term trend, and it's going to get worse. It's not getting easier to find deposits. It's harder for a number of reasons. And even when you're successful, it takes much longer to develop it. So if XYZ company makes a big porphyry discovery in Peru this week, it'll be 10 to 15 years before it goes into production probably because of everything involved in it. So I guess what I'm getting back to is there's a real need for new deposits.
Lobo Tigre of Louis James LLC also spoke about exploration, suggesting that investors may not be paying enough attention to early stage exploration stories.
I'm not sure about trends, but I would say that the unloved redheaded stepchild right now has to be the early stage exploration story. And I understand. I mean, it's hard to get excited about the process. What matters is the discovery, and you never know when that's going to happen. But if you want to buy low, and you want to get in really cheap on something that has spectacular potential, pay some attention to that overlooked area, particularly the prospect generators that use other people's money to offset the risk. They can last years if they have to, and hopefully we don't, right? And hopefully they make a big discovery. But if they have revenue coming in from partners who are spending most of the big bucks, and they have a bunch of projects going on, that is the get rich on process play, which is boring when markets are down, but therefore contrarian and cheap.
Okay, for Paul Robinson of CRU Group, environmental legislation is the trend to watch. Here's what he said about potential long-term impacts.
It's something that is also, I think, a long-term trend, but also a short-term trend. So from the long-term, again, whether it is the recycling of scrap, whether it is changes to the trade flow of scrap and waste material that frankly China doesn't want to process anymore, there's a long-term trend there that will create advantages and disadvantages for investors depending on the positions their stock holdings take at the moment.
And this is what he said about possible short-term impacts.
I think the short-term worry, maybe that's the wrong word, the short-term thing to look out for is sudden changes in legislation. So if you have exposure to scrap processors and suddenly Category 6 changes overnight, you better be on the right side of that position. If you've got exposure to plastics, if you've got exposure to other forms of environmental change, there may be upside opportunity there. Very short in terms of changes in legislation, but there may all be risk.
Mercenary geologist Mickey Fulp encouraged investors to remember that there's an end in sight for the trade war between the US and China, which could have a positive impact on base metals.
Once that is done, and I'm convinced it's going to be done, and I'm convinced it's going to be done in the US's favor, because Chinese need the Americans much more than we need them. Look at the relative strength of the economies right now. Copper's going to soar. Copper's going to soar. So if I was speculating right now, I would be buying some good copper companies that will have leverage to the price of copper.
Finally, veteran investor Rick Rule of Sprott took the question in a different direction, pointing to trends that he would like to see more of in the future.
I think the most important trend for investors is their own education, mastering their emotions, understanding that this is a cyclical business. Bull markets, which people love, are risky. Bear markets are sales when goods are on sale. And if investors will teach themselves that the price of a stock is less important than information concerning its value, they will begin to do well. The second thing I'd like to say with regard to trends, I know it's not where the question goes, but it's where the answer is that asking yourself questions where the answer begins with when, not if. Circumstances like uranium, where it's bound to happen but you don't know when. Asking questions where the answer begins with when involves answering yourself a much higher quality question than one where the answer begins with if.
Overall, the message from those 5 investors was to look beyond M&A activity to other trends that could bring profitability. So do your research and stay informed, because often the best investments are ones that not everybody knows about.